Hey there, we are live at the Beat the Odds at Business and Wealth podcast. And today we're talking with Josh Spurrell, who is in Dubai, in the United Arab Emirates. And today the topic is the truth, the real truth about Canadian real estate prices. So, Josh, where are we going to start with this one?
Well, I mean, we're going to start with kind of what's going on today, and then I'm going to tune it back out where I always tell people when in doubt, zoom out, because I think most people truly don't actually understand what's happening, and a lot of really good quality professionals is they understand their industry, but they don't understand the macroeconomic situation, which is necessary for building wealth. So where I want to take it start right now today, just look at like the base rental prices. So Trevor, if you want to pull it up on the Instagram there, we have the rental prices by city in Canada. Because kind of at its slowest level, if you're someone still in the rental game, you're still renting, and if you're a landlord, you're renting to someone else. So this is important to you.
All right,
Um, yeah, I just flip through to
there we go.
the first page. Oh,
Oh, we're having some issues with your feed there.
hang on. I
All
think I'm
right.
back. You see me? Okay. Yeah.
Okay.
So you start to see, the expensive communities like the Vancouvers, the Burnabys, the Torontos, and they kind of tested the height of the market, the height of the rental market there, and a lot of newcomers coming to Canada. They pushed up the rental rates in those jurisdictions, but ultimately just not sustainable. Like really just not sustainable. And now you've seen what you're seeing migration patterns out of those very expensive communities into more affordable places in the country. And so if you flip through this, Trevor, and specifically, you get to the last page and the more affordable communities, and you saw all the red and the bleeding in the most expensive. One more click there. And then, here you get to, the Quebec City, the Winnipeg, you get to the Edmonton, the Regina, the Saskatoon, and you see green, 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 green. And that's just kind of what it is. People eventually understand that it's too expensive to live in this community. So I'm going to go live in this city here. The quality of life might be slightly better, and you might have, some benefits of living in one city over the other, but ultimately, if you don't have a place to live and you can't pay rent, it's a difference, right? And so, how much better is it, going to be staying in a one bedroom when you can afford a two bedroom in a different city? So, you're starting to see, and you hear this in the media too, because if you just listen to maybe Canadian real estate Twitter or the CBC or something, they would make you think that the entire Canadian market is like the Greater Toronto condo market right now, and it's just imploding all over the places. But that's actually not the case. A lot of the countries in the green in their real estate, whether it be their rental rates or their real estate prices, and so we have to understand that it's probably not as bad as the CBC is making it out to be, just because there's vast differences between different parts of the country. The expensive places are taking a bit of a beating, but they were so far run up in the price that they're just kind of coming back down to reality now. Okay,
Yeah,
and
coming to a correction point, right? And they always like to have some type of sensational, headline, and they cherry pick data to suit their narrative and to paint the picture as negatively as possible. But I like that in our podcast here, we're trying to show people that calm down, don't listen to all the fear that's being portrayed out there. Things are bad in those areas, but there are options for people, right?
That's right. And they think that there's going to be so many people exiting Canada, but we looked at 4 million newcomers coming to Canada over the last 5 years. It's like we even the sheer ability to move people out if they commandeered every commercial flight out of Canada. We did the math on that in a previous episode, and that's not really the practical solution there. So So that's where we are in the rental market. Is you're seeing the exit from the expensive communities into the cheaper communities, and it's not falling off a cliff as people might think, because Toronto's loss, in this case, is Saskatoon's gain type of thing. And so that's happening throughout the country here. So okay, so then the next part is we'll actually look at the prices of Canadian real estate itself. And this is over the last year, and this might shock people, is even over the last year, real estate is still up 2.5%. And so you see the red throughout Ontario. But that is the only province in Canada that is in the red. BC's back over $1 million for an average housing unit. And it's important to understand the definition of a housing unit here. Housing unit is not a single family house. Housing unit could be a condo, it could be a single family house. So it's a mixture of all of them. But overall, the Canadian real estate market is not as they would make it seem on the CBC, where it's they're trying to make it seem like it's everything's just like the Greater Toronto condo market. And I would suggest, like, a lot of the ones that are struggling, a lot of those sensationalized examples those are the people who just bought into a hysteria. Those are the people who bought without any sort of analysis on the property. They're bought at a record price. And we teach people at the boot camp is like, you should be looking at all the prices in that neighborhood or in that building over the last 5 years. And if that prices you out, that's the market talking to you. It's like, now is maybe not really the time to buy, right? And so even the people who are really hurting in Toronto, it's like they probably bought something that was, at a speculative valuation. That's a big percentage of it, right? And so even when you start looking at, like, what's the actual decline there, it's just, it's less than 2% in Ontario. Like, it's less than 2%. Like, that's the actual number. So it's important to understand that overall in the country, it's actually, we're still in the green, and that's just kind of the reality of the situation. So it's important to look at the country as a whole and not think that whatever's happening in your neck of the woods is happening across this massive country. Um, but that's part of it, and so that's part of the surprise with Canadian real estate prices. But it's not the biggest part of the surprise. Is we know that housing has become more, I'm going to put quote unquote, more expensive in this country. But I don't think most people truly understand what is happening, because they see the prices of things going up, and you get, maybe it's real estate professionals, whether it's, accountants or mortgage brokers or, financial advisors, and they're giving advice about products, whether that's, mutual funds or stocks or bonds or houses or mortgages, and they don't actually understand the fundamental basis is everything that we talk about is measured in dollars. And what is the true intrinsic value of those dollars? And so the next chart that I'm going to show to people, it's like this what should really drive it home for those of you that actually think that housing is more expensive. And this is, some viewer discretion is advised here, because once you see this, you can no longer unsee it anymore. We go back 10 years, and the average price in Canada was $441,000 for a house. Okay. And now you have the average price today at $705,000. You get a different number depending on which metric you're going to use, whether you're going to use the HPI index or whether you're going to use the average prices, but the conclusion is going to be the same. So don't get lost in the weeds of that, because you shouldn't be buying real estate for a year anyways. Like, you're buying real estate that's like minimum of 10 years. And I always like to say, it's like you should be buying assets that you're willing to hold for 100 years if you really know how to actually build intergenerational wealth. So, when you go from 441 to 705, like, it looks really daunting, and it looks like, that's where people are shaking their fists at the government, and they're saying that, housing is too expensive, and they're looking for another government to come in and reduce the prices of housing. But what I don't hear from any of them is, what do we use to buy the houses? we use dollars. And once you start looking at it, you'll start to see that the houses themselves are actually not becoming more expensive. Okay. So in 2015, you could have bought a house. Yeah, it was 441,000 Canadian dollars, but it was 294 ounces of gold. Okay. 294 ounces of gold. And that's, gold's been an effective store of value, not for 10 years, but gold's been an effective store of value for 5,000 years when you study the history of money. You fast forward to today in 2024, you can now buy the average Canadian house for 187 ounces of gold. Okay. So the question that people have to ask themselves is, it's easy to say that houses are getting more expensive, but the real, like the harsh truth is the dollars that we work for to buy the houses are actually cratering, and they're cratering at an accelerating pace. Okay. And when you look at gold, which has been the effective store of value for 5,000 years, and then you look at Bitcoin, which is the new kid on the block. It's the new digital gold. It's it would have taken you 739 Bitcoin to buy a house in 2015, and today in 2024, you could buy a house, average Canadian house, for 5 Bitcoin. For 5 Bitcoin. And so I challenge people, because like a lot of people think, we have complete chaos in our government right now, and hopefully we get some resolution and get a better a better administration in there. But I want to pretense better. It's not going to fix your problem, because none of them are even actually talking about the problem. And the problem is the dollars that we're working for are definitely not going to keep up with the price of all the desirable goods that you want to purchase. That has been set in stone since 1971, as we teach people at the boot camp, but it is accelerating now. And that's not a uniquely Canadian problem. It is accelerating everywhere. Now, it's harder in Canada right now than it is in the US when you talk about wages and the price of housing. But when you study in the US too, it's the same thing. The value of houses in the US is not keeping up with ounces of gold. Like, it's not keeping up with other desirable assets. And so, like you went through the mortgage broker program, Trevor. It's like, does
Mhm.
anyone actually ever talk about what is this thing that we measure everything in? The Canadian dollar. We want a mortgage, we want a certain rate, we want an amortization period, but do they ever even think about talking to people and educating people about what is this thing that we measure everything against?
Absolutely not. That is not a topic of discussion in the mortgage broker course. It's all about rules, regulations, laws. Talks about the things that are necessary for you to lead people down the pathway to borrow some Zimbabwe dollars in order to
Yes.
purchase real estate, right? They do not discuss, why real estate prices are going up in relation to the fiat currency, the fake money that we're all accustomed to and all we're using. And also, they don't discuss, that our dollars, Canadian dollars, are devalued against the American dollars because America is the world's currency standard. So, that's not a topic of discussion. It's not taught. It's not taught in schools per se. And I don't even know if it's taught in universities and business schools talking about money. I think you have a story where you went to business school to become a certified accountant, and not once did they talk about anything prior to 1971. So everything is taught in the Rockefeller school program, and it's all since the Fed and all since like 1971. So, that's that's where it is. People are just uneducated about money, the origins of money, what is the real stuff that we should be looking at, and how to protect themselves against just holding these fake dollars, which are slowly losing value every single day. Every minute Every second of the day, these things are losing their value and your purchasing power because that's how that system is set up. So the only way to hedge against that is to have desirable assets like real estate, Canadian dividend paying stocks, real estate, gold, and Bitcoin. So, Josh, what do you got to say on that?
Yeah. I mean, this is the point we talk about. You want to beat the odds at business and wealth in Canada. So you have to understand that the rules of the game are changing. Okay. The depreciation of the dollar is accelerating. And that's not just of the Canadian dollar, that's every fiat currency around the globe that is effectively still floating and tied to the US dollar at this point. At this point, okay. But there's we teach people in the boot camp of the push that the rest of the world is, or a big percentage of the globe is de-dollarizing, and their central banks are buying gold, right? And we see it too. Like I see it in a chartered professional accountant. I could log on right now and I could take a professional development course, and it would talk to me about the nuances of long-term investing in GICs,
Ooh,
which is
bond market. Yay.
which is effectively your chances of keeping up with real inflation with those GICs is effectively zero. It doesn't matter if you could have the most efficient GIC strategy ever. If you took your wealth, if you sold your house and you pumped it into GICs and you came back in a decade and tried to buy that house back, you tried to buy that house back with the proceeds of that GIC investment. Like there's no way that's going to happen, right? There's no
Well,
way that that's going to happen.
well, not only the GIC return or the bond yield not being able to keep up with inflation, don't forget the fees, right?
Mhm.
So the fees alone included with the lackluster yield that you get on your GIC, eventually that goes to zero.
Yeah, yeah. The feeds, primarily like the feed people have, fixed income products inside of mutual funds, and the bank's taking a percentage of that too. And so we really have to understand the truth about Canadian real estate prices in the last decade, and this will blow people's mind. If you said this to 100 people, 99 of them would say you're crazy, and you say that the prices of Canadian houses have actually come down in the last decade, but they've come down in terms of real desirable assets when you compare them across the globe. They've gone up in terms of the wages that we've earned in terms of crappy Canadian dollars, right? And it's easy to blame the current government. It's much harder to even understand. It's like, hey, our government might be bad and they might be, laggards in the group, but they're all failing at this. They're all failing at this. The exponential increase in the money supply is very real. And your goal has to be, it's like, how do you actually keep pace with desirable assets? So when you look at that chart, if you know that the value of Canadian houses is not keeping up with ounces of gold, it's like, okay, now you have to look at other solutions on that. If you're really trying to increase wealth, it's like most people don't understand, you know, they really increase their wealth at the beginning of their home ownership journey because they're so highly leveraged. They put 5% down and basically went 19x on that investment, or they put 20% down and borrowed the other 80%. They did it with leverage. Okay. And so how do you actually use your real estate investment and keep pace with, the shiny yellow rock? It's like you do it with leverage, right? That because, what's the asset classes that have actually kept pace or outperformed is like, the stock market. The stock market has maybe outperformed gold, but it's very important on what you hold because most people are in assets, they're in mutual funds that are not going to outperform gold. So they're not holding the right things. It's like you have to be holding the right stocks or the right real estate, or use the real estate with an effective debt structure, or holding the best performing asset of the last 15 years, which has been Bitcoin. And so like these are the strategies that people have to understand. It's like the value of Canadian houses is actually not going up. It's far better than holding cash. Don't get me wrong, because there's zero chance that you're going to maintain purchasing power if you're in cash. It's just how much and how quickly you're going to get devalued.
Yeah.
But
And
but
one
the
point, sorry, go ahead.
yeah, but the truth of the matter is like when you look at desirable assets across the globe, Canadian houses have actually gone down in value.
There's one thing that I wanted to point out to people is if you are an all in on real estate person, maybe you might consider holding some stock, holding some Bitcoin and gold, and just spreading out your investments across those different desirable assets or even luxury goods, right? Simply because look at what happened in California. A lot of people had millions and millions of dollars invested in their properties, and due
Yes,
to mismanagement of, you know, fire, fighting, whatever people want to call it out there. I don't want to just get banned on YouTube for saying stuff, but basically, their house is all burned up. Their real estate is gone. And it doesn't look like they're going to be getting it back. The rumors are that a lot of them were uninsured or
on an inch.
underinsured.
So
So I
yep,
mean, basically that whole investment, that nest egg is gone if they're hoping to cash out on that one later on. You gotta,
yeah,
spread things out a bit.
the tangible value of my house. Like I can see it, right? Okay. But what happens when Olivia Chow comes along and says we're going to raise property taxes by 25% in 3 or 4 years? Like, what is the true intrinsic value of that house? And so, like, people think that we play a game that's a free market. We don't play a free market game. It's manipulated by government regulations and the banking industry. And so by spreading your assets out across different asset classes, you actually reduce your risk. Just because you think I can see the house that I'm definitely in the least risky asset. It's like, yeah, you just mentioned natural disaster. You're totally dependent on an insurer. Maybe you can get insurance, maybe you can't get insurance, maybe the insurance rates become crazy. You're totally dependent that your municipal government doesn't tax the heck out of the property, so it becomes uneconomical to hold it anymore. It's like that I'm in real estate and it's a tangible asset and therefore it's less risky. It's like, no, it's not. It's like that's a very good example that you put up there, Trevor. It's like people had multi-million dollar properties burnt down, no insurance, going to zero. And they didn't think that was going to happen a week before. How many of them say they had a $10 million home? How many of them would have said, and I should have sold that $10 million home and had $5 million of stocks and $5 million of Bitcoin? Like that's a real thing, right? And that's a big number that I'm throwing at people. And some people are like, oh, I'm not in that situation. But like the key is getting off of zero in those other asset classes. We just showed you that houses actually don't keep up with they're actually going down in value, according to gold, and they're going down in value according to a lot of other desirable assets across the globe. So having that as the only asset, your only savings mechanism, is actually incredibly risky, right? And so the action step is it's like we got to get you off of zero on those other asset classes. You got to do some research. You got to figure out it's like what are the ways that you can outperform ounces of gold, whether it be with real estate or other things. Because you can do it with real estate, but generally you have to be in the right area, or you have to be using debt to do it, right? And normally both, even both of those. It's where you're using debt, because if you know how to borrow the money at 5%, you know what assets you can put it on that earn 10%. It's like, okay, now we're playing a leverage game. And so that's the point where I hope we've opened someone's eyes here today that the value of Canadian real estate actually is going down. And if you want to get on the right side of that trade, that's the point where you come to the boot camp. We do it twice a year. We show you what investment strategies actually do outperform the real rates of inflation, and different strategies too, because there's no one, silver bullet, right? There's no one silver bullet where, this is the one that has no risk and everything else is risky. So
That's
hopefully
right.
that's helpful. Hopefully that's helpful to someone out there, Trevor. And I think we'll have one more next Friday. I'll still be in Dubai. I think you'll be the last person I talk to before I head to the airport. So I think I talk to you, and then I come back to the airport, and then I'll be back in the good old Edmonton there. So hopefully I understand the weather there in Edmonton is not quite what I have behind me here. So
Oh, my friend, it's brutal. Let me tell you, it looked like the ice planet of Hoth. It looked like a Star Wars episode last night. It was just crazy. But anyway, well, I'll try and save some of that cold weather for you. All right.
please don't, please don't. Okay.
See ya.